Hey, good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is May the 20th, 2025, and I got a few requests about canola today. Todd reached out to me about new crop, and so we will look at the futures and we will look at the Saskatchewan cash prices too, which of course apply. The analysis still applies in Alberta and Manitoba as well. So this first chart here is the weekly canola futures chart. And you look at we're getting a nice green candle here today. It's trading at 715 right now. That's a good sign. I like it above 700. And after we found that resistance back here at the high of 735.40. Now you will remember that we had this gray line drawn here, and that was between 733 and 745. That was our area. We anticipated that area to act as resistance, and it did last week. But right now, this week is green, and it's looking like it wants to move higher. I think it's a bit early, but I'll show you why. But I do like it as long as we're above 700, and obviously I have to like the price and think that it's going higher. But we're quite extended from this green 50-day moving average, and so what happens is the price and the moving average will converge on one another at some point in time, and I think that maybe we do get a pullback. But I mean, we're trading at 715, and if close the week out today, that'd be a new closing week high going back to October 2023. So it's a good sign. I think the market's telling me to stay long canola at this time. The daily chart, you can see we got the pullback, found some buyers around that 690. We anticipated that. Remember that? We talked about 690, maybe as low as 680. I should probably add in even down here to 650 because test this 50-day moving average here. But, to me, this is a good sign. We're off to a good start this week. We want to be long above 700. Below 700, we want to start taking some risk off the table. But let's take a look at the cash price in Saskatchewan. So this here is the monthly chart. And you will recall that we identified a possible inverse head and shoulders pattern forming here at the left shoulder, head and the right shoulder, inverse head and shoulder pattern. I drew a neckline in this yellow line here. I think I have it marked here above 1436, but that's where we start our measured move. So we broke above this neckline. So what you do is you have a measured move, and you measure from the top of the head to the neckline and extrapolate that higher. So we have a measured move price target between $19.40 and $20. So we'll see if that gets there. Got lots of effort to get to that price, but I mean, at least it's showing some signs that maybe the trend is reversing. This green 50-month moving average overhead is going to likely act as some sort of resistance, but more importantly, the 1790 level right here where this previous support was. Let's look at the daily chart. And again, you can really kind of see the head and shoulders, inverse head and shoulders pattern a little more. It's not annotated on there, but I do anticipate a retest of this neckline. I think, even though I think the prices are going higher, they're not going to go in a straight line, or very rarely do they go in a straight line. So I would not be surprised if we get a pullback here this week or next week down to 1420 on my Klarenbach price index, down to this 10-week moving average, and before we can build up higher. So what happens is when you have a breakout, often that breakout level gets retested before the price moves higher. We haven't had that retest yet, in my opinion. So I don't think it's going to straight line, but I am fairly, I'm bullish on the prices. We can look at the daily chart here too, and let's get the line chart on here for that. And yeah, I mean, I think we get a pullback. So that'd be about a 70-cent pullback in the cash price of canola. But so yeah, you want to really, futures get below 700, you want to take some risk off the table. But Todd asked about new crops, so let's take a look at the November contract here, and this here is the daily chart. Let's look at the weekly chart. It's more important. So we have this trading range highlighted by this gray box here, and we're trading right at the top of that trading range. Now, every time it's got up there or close there, we've had a dramatic sell-off in the November contract. We're right there right now. Broke above it last week, but did not close above that trading range. So I mean, if we're expecting a pullback in the price, it probably is going to start at this level in the new crop. So be wary of that. I do think the price is going higher, but it has to match your time frame. And so if you want to take some risk off the table, you can certainly do that. If it pulled back, I'd look for an entry myself with my own strategy, probably somewhere around 640. Maybe if it got down to this 50-week moving average, I'd take a crack at a long position, maybe. But more importantly, your entry isn't as important as where your stop goes. So what you want to do is you want to wait for a bottom to maybe set in and get a higher high and place your stop below that bottom. Is one of the best strategies to do. Picking a stop. Stops are designed to keep you in a position and to take you out of a position. So just keep that in mind. They're very difficult to select anyways.